Hello, this is Peter Yoganellen reporting for the NB Media Co-op for Moncton. We're speaking today about federal legislation that came into effect on January 1st, lowering what's known as the criminal rate of interest. The federal Liberals pledged to crack down on predatory lenders by lowering the criminal rate of interest in their 2021 election platform. But we asked, do the changes go far enough? For more on this, I'm on the line with Professor Gail Henderson with the Queen's University Faculty of Law. Thank you for joining us today.
Oh, thanks for having me.
Gail Henderson is the co-author of a recent article in the Dalhousie Law Journal examining this issue. Just to give a full disclosure, I'm part of the group NB ACORN, which is a community union of low and moderate income people. And we have also campaigned to lower the criminal rate of interest from 60% to 30%, including all fees, charges, and so on. Now, the new law lowers the criminal rate of interest from an effective rate of 60% to 35% APR. Some of this terminology can be confusing. So we asked, what's the difference between an effective rate and APR? In other words, could you explain, Professor Henderson, what the new legislation does and how much has the interest rate been lowered?
Yeah, so the old rate of 60% effective annual rate roughly translated to between 47 and 48% APR. So a reduction to 35 is about a 13% decrease. So, the number looks bigger if you compare the 35 to 60, but it's probably more accurate to compare to the 48 or 47%. Another thing to note, you mentioned the terminology. The decision was made to shift from the effective annual rate to annual percentage rate, or APR, because that is more familiar to consumers. It's what you see on advertising. But the criminal APR is different from the APR in advertising, because the way the advertised APR is calculated is, the best way I can put it as a non-accountant is it's a simpler calculation. So the criminal rate of interest takes into account a few more factors. So there is likely to be some difference between the advertised APR and then what the actual interest rate is. And it's that actual interest rate that borrowers pay that the criminal code is regulating.
Okay, so definitely understood here. Now, there is a distinction here between installment loans and payday loans. So I would ask, what's the difference and how does the new law address payday loans specifically?
Right. So the difference, as I understand it, is the payday loans tend to be smaller amounts and for a shorter term. Installment loans tend to be more money and you pay it off, as the name suggests, in equal installments over time, whereas payday loans ideally are paid off in one lump sum at the end of the loan period. So the main difference is that payday loans are actually exempt from the criminal rate of interest under certain conditions. So one of those conditions is that the province or territory has legislation regulating payday loans. So New Brunswick has this type of legislation. Most of the provinces do, Quebec does not, and the territories do not. So the exemption doesn't apply in those jurisdictions. But where the exemption applies, payday lenders are not covered by the criminal rate, but the new amendments to the criminal code create a new federal cap on the cost of payday loans. So typically that cap is expressed as a percent of the amount borrowed, or, you tend to see the way it's advertised, it's a certain amount on $100 borrowed. So I think in New Brunswick, prior to January 1st, it was $15 on $100 borrowed. The new federal cap is, in order to be exempt from the criminal rate of interest, the most they can charge is $14 on $100, in addition to interest fees on default and a few other types of fees.
So I'm aware of how predatory loans work from a personal experience and from hearing what from others in the community. My experience personally was um, when I went through a divorce quite a few years ago. You lose basically all of your credit rating when you do a bankruptcy. It was something that was basically forced to happen. There was a home that me and my ex-spouse owned together, and we were running behind on a lot of bills. There was two young kids, so I kind of turned to this kind of as one of my only options. So, you know, the basic thing was is that there was a lot of things that really affected me down the road, like hidden fees. So I asked, what in your view, what is the effect that higher interest rates have on low and moderate income people and their communities?
Yeah, so there's, a few things I can touch on there. Certainly the concern and, this was, I think, motivating the federal government to do something about these high cost loans is the concern that it puts borrowers into a cycle of debt where you end up paying more in interest and fees than the amount that you initially borrowed. And you mentioned like one reason that people access high cost loans is maybe some past financial experiences that harmed their credit rating. So that means that they might not be able to access credit at more reasonable rates from a mainstream bank or a credit union. And also individuals without a credit history in Canada. So there's some evidence that newcomers also end up accessing high cost credit. And then Indigenous persons who, might not have a relationship with a bank are also more likely to access payday loans or other fringe financial institutions. And then there's also the problem of the location of mainstream bank branches versus alternative lenders and the neighborhoods they tend to locate in. So those are all factors that might push people into borrowing from high cost credit, but it's certainly the case that borrowers accessing high cost credit tend to have lower incomes and less wealth than borrowers who are accessing the mainstream banks.
Yeah, it is something that's really, we've noticed as well, targeting people that are low and moderate income deliberately, seniors, those on disability assistance, this sort of thing. It's kind of where I got involved after seeing that happen and my experience as well. So I just wanted to ask, in the industry, the companies providing these loans, kinds of loans are sometimes called alternative lenders, and their customers are referred to as non-prime. Could you talk about who is part of this category of so-called non-prime borrowers, their demographics, and so on? And why do they have to resort to alternative lenders really to begin with? We've sort of touched on it. Could you elaborate a little bit more?
Yeah, so that sort of distinction between prime and subprime is deals with the rate of interest generally that people are forced to pay. So the way the alternative lenders justify their higher rates of interest is they say they're pricing the risk of default. So they're pricing in the risk that the borrower can't repay the loan. And one of the things that the banks look at, we've mentioned before, credit history. And so if your credit score is lower, and I mean, there's all sorts of issues with the way those credit scores are calculated and fixing mistakes, but that's maybe a topic for another day. But anyway, the credit score is not a perfect way of judging whether someone is at risk of default or they're not going to repay. But a low credit score can shut you out of the market for credit at prime interest rates. So the bank might say, we're not willing to take on the risk. The alternative lenders say, we are willing to take on the risk, but we're going to charge much higher rates of interest to cover that risk. And so one of the things the alternative lenders are saying about the new criminal rate of interest is that means that they're going to be able to their argument is they won't be able to price to that risk. And so more people will be shut out even of the high cost credit market. I think we'll have to wait and see if that's what actually happens and how that affects borrowers. But that's kind of that main distinction there. And so, one of the things that I think some people who work on these issues are thinking about is, are there ways to assess borrower's ability to repay that doesn't just rely on a credit score?
Yeah. Oh, yes, definitely. And that is one thing on this. It is really good that we've got this new legislation introduced because it is going to help people who would consider taking out these loans. However, there is still some things that, us at New Brunswick ACORN, us at ACORN Canada, sorry, are concerned about. Um, you know, Leading into that, I'm just going to ask, what are the shortcomings of the new legislation in your view? What's kind of some of the pitfalls that still need to be addressed?
Yeah, so one of the issues with putting this in the criminal code is that, criminal law is generally enforced by local police who maybe don't see regulating lenders as being the most important thing that they're doing in a day. And I know anecdotally there have been situations where somebody says they say, well, who enforces this law? And the provincial regulators say, well, it's federal legislation, so it's the police, and the police say, no, this is the provincial regulator, and so you just get sent back and forth. The payday regulations are adopted and enforced at the provincial level, but then there are concerns around the extent to which they're doing so. I think some provincial regulators are more active than others, but I do have a question about the extent to which the new criminal rate of interest will be actively enforced with respect to the installment loans. There are not a lot of examples of prosecutions under the section previously. And then one of the other shortcomings, and it looked like maybe they were going to fix this, but that has been put on hold with the prorogation, are proposed draft amendments that would address the issue of credit insurance charged by these lenders, which really adds to the cost of the loans. And so it's not clear what will happen with those additional amendments to the criminal code at this point in time.
Oh, yeah. And it's one of those things that, it's good that we're getting most of this worked on, but yeah, there's definitely more. And this is something that ACORN Canada would agree. It is a victory, and that we're seeing that they have to take some steps to do this, but there is much more to be done. Now, I do want to ask you, what do you think about the idea of affordable loans through the post office, so-called postal banking, which the labor movement has called for, as well as ACORN? What are your thoughts on postal banking?
Yeah, I mean, I know there was a very short-lived pilot project between Canada Post and TD. That was, I think, that it was very short-lived. It didn't last very long. I'm not sure what the reasons were for that. There's certainly other people who've looked into postal banking more than I have. That's one option. I think another is pushing the banks a bit more on what they can do, right? They're already set up to give loans. They have branches, they open deposit accounts. And so the federal government is currently reviewing the Bank Act and the access to basic banking regulations. And that's an area where I think they could think about providing access to loans at more reasonable interest rates to some borrowers who are currently forced to borrow from alternative lenders.
One thing that we do a lot of with New Brunswick ACORN, I'm a co-chair provincially, is that we always try to do education for the public around issues like predatory lending. So I do want to ask, because this question has actually come up with me and people have asked me my thoughts on it. So I would ask kind of you as a legal expert, what advice would you give folks to consider should they have to actually turn to an alternative lender? What's the best things to watch out for? What's the pitfalls? Those sort of things.
Yeah, so I think there's a couple of things um, that I can think of concerns that I have. I mean, one is the way these loans are advertised is really like get cash quick. It's a simplified process, and in that scenario, any of us might not stop and take the time to read the fine print, which also is not always easy to understand. Even as a legal expert, I read some of these documents and think, okay, I think I understand, but I'm not entirely sure. And so, I think taking some time is important and not feeling pressured into taking a loan that where you're not fully aware of all of the potential fees that could be incurred. I think something else, people are sometimes overly optimistic when they hear about certain fees. Well, I don't have to worry about that because I'm going to be able to pay this off when the time comes. But
Mhm.
things happen in between the time when you take out the loan and the time that it becomes due. And so keeping in mind, like, okay, if the worst case scenario happens, how much is this going to cost? And the last thing I would mention is on the credit insurance. I think it's not always clear that that is optional and you can opt out of it. You can say, I don't want this credit insurance. And that, because as I said, the credit insurance really adds to the cost, the already high cost. And so avoiding that, I think helps to make the cost of the loan at least a bit less. So understanding that credit insurance uh, by law has to be optional and you can say no. It's not a condition for getting approved for the loan.
Yeah, that is definitely good advice. Myself, I made this mistake. So I would just kind of ask, because I didn't get a whole lot of documentation around the actual terms and conditions when I got this. So if someone does go out and get a loan from one of these lenders, what documentation should they ensure they receive from the lender itself? Like in my personal experience, I felt rushed to sign a contract with fully reading and understanding the things like the insurance that you talked about in the late penalty fees. Those were the two ones that really came back to haunt me. So I was wondering if you could just elaborate on what documentation really they should be looking for.
Yeah, and I think part of the issue is that it's sometimes hard to get access to the full terms and conditions in advance. They're probably not going to give you a copy of the contract that you can take home and read through. But also, I think those documents, they're written by lawyers, and we're not always great writers or communicators, and they're not always written to be easily understandable. But there are some good sources of information that I think people can access in advance. So the Financial Consumer Agency of Canada or the FCAC, their website provides some, general information, not all of the details, but some, and they also provide some comparator tools to compare the cost of different loans. I'm sure the New Brunswick regulator also probably has some information on their website. So those government websites can be very good sources of general information. So you walk in, maybe having a better sense of the questions to ask before you sit down to sign a loan document.
Oh, yes, definitely. And thank you for that. That is good educational pieces. Things that people should always pretty much consider is everything on there. And, in my case, I should have, knowing this now, I should have basically insisted on having everything in front of me and say, yeah, I'm going to go somewhere, sit down, have a coffee, read this through, give me an hour and I'll be back. But it's high pressure sales. So, I mean, it's one of the pitfalls I know now that I shouldn't have done, but it's a time, yeah, it was a mistake I made.
But I think you're right. Like it's very easy to think, okay, this is what I'm going to do, or this is what I need to do. And you get in the moment. And I think we've all done that and thought, well, like I don't really want to sit here. Like this is going to take a long time. I don't always read things before especially with, things that we access online, and it's so easy to just click okay. So I think, it's easier said than done. And
Yeah.
you're right, it can be a high pressure sales environment as well.
Yeah. Oh, yes, definitely. And that's one of the things is just know your options. And that's part of why we wanted you on the show today, just to speak about this. And, so thank you very much for all your advice, everything like this, having this discussion. So on behalf of the Media Co-op, I've been speaking with Professor Gail Henderson from the Queen's University Faculty of Law. Thank you so much for joining us in speaking with the NB Media Co-op today.
Thank you.
Hi, this is Peter Young and Ellen with NB Media Co-op in Moncton, and I'm speaking with Donna Borden, who is National Fair Banking Coordinator for ACORN Canada. She's located in Toronto. Thanks for joining us today, Donna.
Thank you for having me.
Oh, yes, and good to talk to you again. I know we've talked before on this. As you know, I'm co-chair of New Brunswick ACORN. Together, we've campaigned for the reduced criminal rate of interest, which is now in effect and came into effect January 1st of 2025. So it's a great victory. Now, I believe that you've been involved in this effort since its inception back in 2014. So my first question is, how did you get started with this campaign and through ACORN?
Well, I had taken out an installment loan and kind of got caught up with them and kind of got into a little war with them. When I tried to file a complaint about them, I realized that there was no complaint process. They basically were just like the Wild West. They could do whatever they wanted. And so I kept looking for a complaint process, and the only people I could find that were doing anything to fight anything like this was like the payday loans was ACORN. So I called up and made an appointment to come and see them. They were just up the street from my house, the office. Went up there immediately. I sat down and they understood exactly what I was talking about. And they said, yeah, let's take on this campaign. So I signed up and I've been a member ever since.
So I guess with this victory, I do want to ask is, do you think that the new legislation goes far enough? Or what still needs to be changed? What are the next steps?
Well, I think they need to include the fees, the insurance fees. Well, I want to even go further with the insurance. I don't think that they should even be allowed to offer insurance. I think it should be like credit cards where it's like a separate company altogether. But they should include all the fees included in these that combined with the lower interest rate. And I'd like to see that for one thing. Of course, I would like to go down eventually. Better complaint process, more complaints, like, more understanding for people to go to. So more clear-cut applications or contracts that you sign. So there's quite a bit I'd like to see. I'd actually like to even see the courts be a little more educated on. I know people go to the courts and try to fight these people. The courts, the judges, and don't understand how the interest works. Like, I'd like people to be a little more educated so that people can file a complaint if they need to.
Oh, yes, definitely, definitely. So in regards to the talk about fees that are hidden in the fine print, I know myself, I found out the hard way about this because I had taken out loans myself through what was basically like Easy Home for a computer, a couch, and a laptop computer. So the next step for ACORN would be to basically address those other parts around the fees and the insurance, correct?
Yes. Yes. When we brought that up anytime we've ever met with, and I think they understand, a lot of the people are getting better at understanding that are coming in from the finance minister and things like that. But I mean, they can only do so much themselves, right? We just got to keep up the fight. Like, that's one thing ACORN doesn't do is give up. We just keep going.
Now, there's another part of the ACORN campaign that was to reduce non-sufficient funds fees, or also called NSF fees, down to $10 at the big five banks. Now, we currently have a petition going through ACORN Canada's website. What are those fees like right now? And what's the big push on this to get this taken care of?
Well, they're $48 for a payment. So what happens is, even if you can't, you bounce a $10 check, because some people don't have a lot of money. Sometimes they're just short $10. They charge you 48. And then the next one bounces, and then they charge you 48. Then the next one bounces, and you just keep paying. So the campaign that we have now is that it's $10. So it's $10, and then they have to, if it's under that amount, they can't charge you. They can't charge you for the next one or the next one. They have to contact you. They have to give you the heads up that you're low, that you're lost, that your your amount is below. So it's a really good start. And the way that they present it is good. The problem is now with all this hoopla going on with Trudeau stepping down, and I just hope that it doesn't go under the radar, and they just forget it, because it's very important. It's something that should have been there. A lot of work was put into it by us and by the people who set it up, and it just needs to go through. And I just hope that nothing happens, that they just, forget about it.
There's been a big part of our campaign, which was to encourage postal banking as an alternative to predatory lenders. I can tell you for a fact, I used to live on Deer Island. I lived Deer Island, New Brunswick, and so it's in the Bay of Fundy. They lost their only credit union, their only bank there a number of years ago. As well, other communities along the Bay of Fundy, small islands like Campobello and Grand Manan, and rural areas of New Brunswick have lost basically any sort of bank that used to be local. So we're wondering what your thoughts are about postal banking and this kind of initiative in regards to them, people not having to, go to these predatory lenders, and postal banking as a very viable alternative.
We really were interested in that for a long time. We even went to a lot of protests with Canada Post about it, because we were finding that a lot of the small little towns here, like you said, there was no banks, but they had like a payday lender. So people had no other choice but to go to the payday lenders. So they didn't provide them with a bank, but everyone has a post office. So the post offices were there. And apparently there was like the post office told us, like the unions told us, there was a huge report that was put out about researching about postal banking and how successful it would be. So you'd still have people working and you're doing the postal banking. But the problem was that when we tried to get a copy out of it, it was all just black. Like they just blacked out everything. So we couldn't see anything. So I feel like postal banking is one of those alternatives that would be successful. And like you said, everyone has a post office, even if they don't have a bank. But why would you take a bank away and not allow people the option, but then have them have, a payday lender? Like put a predatory source in place instead of a bank. So I think postal banking would be a perfect solution.
Well, I've been speaking with Donna Borden, National Fair Banking Coordinator for ACORN Canada. Thanks for joining the NB Media Co-op today.
Thank you. Take care.
Thank you.